It's the Tuesday News Day. I'm your host, as always, Andrew, and we have count 'em, five jam-packed news stories to get through today. Be sure to watch the whole thing and give your attention span a vigorous workout. First up, we'll discuss the Paxos rebrand, followed by a new study showing the US leading in DeFi adoption. Then the CFTC commissioner puts the crypto commodities debate on blast. And we look at how a 51% attack could affect blockchain integrity. And finally, we kick back and play some NFT video games. For our first story, back in 2018, Paxos launched its Paxos Standard stablecoin, known by the exchange symbol PAX. Since then, its market cap has increased to $944 million. Currently sitting at the 7th largest stablecoin by market cap, Pax is currently behind multiple coins that have launched more recently. USDC, which launched a month after Pax, currently has a $27 billion market cap. A few additional stablecoins, which launched in mid to late 2020, BUSD, DAI, and UST, have also overtaken Pax in market cap. Like USD Coin, Pax Dollar is regulated by the New York Department of Financial Services. Both hold a BIT license, the regulatory gold standard. Paxos also received a national bank charter from the Office of the Comptroller of the Currency in April, giving it national oversight as well. Notably, PayPal is running all of its considerable cryptocurrency transaction business through the Paxos exchange. Pax's growth issue may not be related to reputation then, since the company has chosen to rebrand its Pax Standard stablecoin to Pax Dollar, or USDP. As USDP, everyone will be able to instantly recognize our token as a dollar-backed stablecoin, Paxos head of strategy Walter Hessert said on an August 24th announcement. Quote, "The name makes it obvious to anyone. USDP is a dollar, and Paxos is committing to ensuring USDP always equals a dollar. Will a rose by any other name smell sweeter? We'll have to stay tuned to find out." Next, the rise of DeFis. The blockchain intelligence firm Chainalysis's new DeFi adoption index finds large economies lead in embracing decentralized finance. While the US is solidly on top with a 1.0 rating, it is followed by Vietnam with a 0.82 rating, Thailand with a 0.68 rating, and China with a 0.62. Among the findings is that, quote, "large transactions make up a much bigger share of DeFi activity, suggesting that DeFi is disproportionately popular for bigger investors compared to cryptocurrency as a whole." Chainalysis asked David Gogol, growth leader at the popular DeFi protocol DYDX, about regional DeFi growth patterns. Quote, "Right now, DeFi is targeted towards crypto insiders," he said. "It's people who have been in the industry for a while and have enough funds to experiment with new assets. In the long run, as Ethereum gas prices fall, it'll become accessible to more people." Our third story brings us back to old reliable regulation. This time, the Commodity Futures Trading Commissioner, Dawn Stump, is blasting cryptocurrency traders and insiders, claiming that they have a broad misunderstanding of the agency and its actual role. Decrying what she says is a grossly inaccurate oversimplification offered, which suggests these are either securities regulated by the Securities and Exchange Commission or commodities regulated by the Commodity Futures Trading Commission. Stump laid out a 10-point document clarifying her agency's authority and role. According to Stump, quote, "The CFTC does not regulate commodities, regardless of whether or not they are securities. Rather, it regulates derivatives, and that is true for digital assets just as for any other asset class. Rather, the CFTC regulates future contracts on commodities and other derivatives products such as swaps," she wrote. Therefore, she added, "even if a digital asset is a commodity, it is not regulated by the CFTC." Summing up, Stump's 10th point said, quote, "To determine the CFTC's regulatory authority with respect to a digital asset, ask not whether the digital asset is a commodity or a security, ask whether a futures contract or other derivatives product is involved. And now we explore a broader crypto topic, specifically the subject of 51% attacks and how they can hypothetically compromise a blockchain. You can read the full article by asking Alex in the description below. In a nutshell, a 51% attack is when one or more cryptocurrency miners gain control over more than 50% of a proof-of-work blockchain network's total computing power or hash rate. If successful, 51% attackers can prevent the recording, validation, or confirmation of transactions, change transaction processing order, and reverse existing transactions and then double spend the coins. Numerous 51% attacks have taken place in recent years. One of the most recent was the August 2021 attack on the Bitcoin BSV network, the third in as many months. But is a 51% attack considered illegal? As of right now, nobody knows. In the United States, the Computer Fraud and Abuse Act may apply to the actions of 51% attackers, although it is far from clear that this is the case. The fact that this question has no definitive answer highlights the issues with the lack of regulation of cryptocurrency and cryptocurrency markets. And finally, could the cryptocurrency prime Bitcoin suffer such an attack? Given the high cost of mounting such an attack, it's rather unlikely, since such an attack would be rather costly. Estimates range from a $1.5 million cost for 1 hour to $15 billion. It's theorized that only a state-sponsored actor with access to massive amounts of equipment and a large independent power source could even attempt a 51% attack on Bitcoin. And for our final exploration of the day, we witness a melee between NFT games. NFT games offer their users a unique gaming experience, mainly because players have a chance to earn various cryptocurrencies by interacting with the in-game content. While NFTs and games are usually intended to aid in the creation of a distinct avatar or character, some see them as a sound investment that will pay off handsomely in the future. Two of the more popular games are Axie Infinity and CryptoBlades. First, let's explore Axie Infinity, a game released 3 years ago developed by Sky Mavis, a Vietnamese gaming firm. It is a play-to-earn game, as well as a complete NFT-based economy. To give an idea of its scope, in July 2021, Axie raked in more protocol revenue than the two cryptocurrency giants Bitcoin and Ethereum. But what's the game like? Axies are adorable animals, similar to CryptoKitties, NFT collectibles that arguably started the NFT trend, and each one is distinctive. An Axie is a non-fungible token, meaning it is a one-of-a-kind digital collectible. Axies can be bred and battled, as well as sent on quests for resource farming. Additional items like love potions and infinity shards can be used to perform in-game actions. And now we turn to CryptoBlades, which focuses a bit more on action and adventure. CryptoBlades is a web-based NFT role-playing play-to-earn game which offers in-game challenges for a chance to win skill tokens. It is currently ranked number 1 in the Binance Smart Chain Portfolio Tracker list. Players may improve weaponry, boost overall power, and exchange characters and weapons using CryptoBlades' unique system. Players complete in-game raids and kill formidable opponents, earning skill tokens. Holders of skill tokens can also stake their skill tokens to increase their earnings. But which one wins? Well, if you're more of a Monster Rancher, Harvest Moon, or Stardew Valley fan, Axie Infinity might be more up your alley. Meanwhile, if you're more into things like Diablo, Skyrim, or The Witcher, maybe take CryptoBlades for a spin. If neither of these options sound like your cup of tea, though, we have a list of 5 other NFT games on our Alexandria article that might be the perfect match for you. Did we miss your favorite NFT game, though? Definitely let us know in the comments below. And that's our news brief for today. If you've learned something, be sure to give this video a thumbs up. If you want more daily news videos in the future, be sure to subscribe to our YouTube channel. If you want more information on any of our stories, or just want to know more about crypto in general, you can go ahead and ask Alex in the description below. Once again, I've been your host Andrew, we'll see you tomorrow, and be sure to have a good one.